So, did you happen to catch the headlines recently about the Federal Reserve?
Hard to miss, really.
Yeah, it was pretty big news for anyone tracking the economy. For the fourth consecutive time, the Fed held interest rates steady,
Mm-hmm.
keeping that key rate right where it is, between 4.25% and 4.5%.
Holding pattern.
Exactly. Now, on the surface, that might just seem like, okay, business as usual. But here's where it gets, well, really interesting.
Mm-hmm.
Chairman Powell and the committee, they also signaled they're planning 2 rate cuts.
Okay, that's the part people notice.
Right. And this is a really crucial, but not until later in 2025.
Yeah, pushing it out quite a bit.
It's a fascinating decision, isn't it?
Right.
Speaks volumes, I think, about the complex economic currents they're trying to navigate right now.
And that's exactly our mission for this deep dive today. We want to go, far beyond just that headline figure.
Right.
Our goal is to really unpack the complex economic pressures and, frankly, the intense political dynamics that are influencing the Fed's decisions.
Yeah, there's a lot going on beneath the surface.
Absolutely. We're talking about the looming concerns about tariffs, those very public political demands for aggressive rate cuts, and crucially, what the economic forecasts are actually predicting for the rest of 2025.
And we've looked at quite a few sources for this.
We have. To give you the most comprehensive, well-rounded view possible, we've pulled from a really diverse stack of sources: Yahoo Finance, ABC News, BBC, The Telegraph, and several others too.
Good stuff.
Yeah. We want you to walk away with a crystal clear understanding of the forces at play and maybe how they might impact your own financial world.
Okay, so let's kick things off then with something Chairman Powell has been, well, pretty vocal about.
Yeah.
The shadow tariffs are casting over the economy.
Mm-hmm. A big concern for him.
He's warned, repeatedly actually, that President Trump's tariff policy could lead to a truly challenging economic scenario. He even used a specific sort of ominous term for it.
Stagflation.
Exactly. He's voiced concerns these tariffs could push the economy towards stagflation. So maybe for our listeners, especially those who just vaguely remember the term, what does stagflation really imply here? And why is that specific concern so critical for the Fed right now, especially like when inflation is actually near its lowest since 2021?
Right, that's a great question because the context is key. What's really fascinating here is how Powell defines stagflation in this situation. He describes it as basically inflation going up, but at the same time, economic growth is slowing down.
Ugh, not a good
It's
mix.
pretty much a nightmare scenario for any central bank. His specific concerns are very clear. He's highlighted that these tariffs probably will raise prices and weigh on economic activity.
Okay, break that down a bit. How do the tariffs do both?
Well, think about how tariffs work, right? They're essentially taxes on goods coming into the country. So if a company has to pay more to import parts or finished products, they're likely to pass at least some of that extra cost on to consumers.
So prices go up, inflation.
Exactly. But at the same time, if those tariffs make goods more expensive, well, maybe consumers buy less. Or maybe businesses hold off on investing because things are uncertain or more costly.
Okay, so that slows down the economy.
Precisely. And that creates this direct, powerful tension with the Fed's dual mandate, that crucial balancing act they have.
Price stability and maximum employment.
You got it. It's like trying to press the brake and the accelerator at the same time. It's really tough.
Look, so what are their options then?
Well, look, if they raise interest rates to fight that tariff-induced inflation,
They risk slowing the economy even more.
right, potentially pushing us deeper into the part of stagflation. But if they cut rates to try and stimulate growth,
They could make the inflation from the tariffs even worse.
exactly, they could fuel the inflation part. Powell sees these tariffs as a significant and maybe escalating economic risk. He noted they are much larger than anticipated, and the economic effects are probably just as substantial.
So it's not just a temporary blip he's worried about.
No, his main concern isn't just a temporary bump in prices. It's preventing these tariff-induced price increases from becoming a persistent inflationary problem. Even though, as you rightly pointed out, current inflation is actually near its lowest level in years.
Wow.
It really highlights the delicate tightrope walk the Fed is on. They're trying to anticipate future problems while dealing with the data they have right now.
That makes the Fed's position just incredibly challenging, trying to prevent future problems, dealing with current data. And then, as if that wasn't enough, they've got intense political pressure to deal with.
Oh, yeah. That's a whole other layer.
I mean, President Trump, for example, has really intensified his criticism of Chairman Powell.
Mm-hmm.
quite significantly. He's famously called him a stupid man
Mm-hmm.
and Mr. Too Late,
Mm-hmm.
while also making very public demands for aggressive rate cuts, specifically by a full percentage point.
Full point, yeah. That's a big demand.
Trump argued that a cut like that would be like rocket fuel for economic growth and would even supposedly reduce the interest on the national debt, saving billions.
Quite the claim.
He's quoted saying, we don't have inflation, we only have success, and I'd like to see interest rates go down.
Okay.
And it's not just the former president. Vice President J.D. Vance also publicly described the Fed's reluctance to cut rates as, quote, monetary mismanagement.
So direct criticism from high places.
Very direct, pointed, and public. So how has Powell actually responded to this kind of, well, unrelenting political pressure? What does it tell us about the central bank's independence?
Well, this really gets to the heart of a crucial principle for any effective central bank, its independence. And Powell, he's been pretty unwavering in his stance.
How so?
He's consistently maintained the central bank's autonomy from political interference. Very notably, he has refused to comment directly on the president's remarks.
Just doesn't engage.
Pretty much. Instead, he chooses to emphasize again and again that the Fed's monetary policy decisions will be based solely on economic data, not on political demands, not on rhetoric.
Why is that so important?
Well, look, it's not just about professional decorum. It's absolutely crucial for the Fed's credibility, both here at home and, on the global stage. If markets start to perceive that the Fed is bending to political pressure.
Trust goes down, uncertainty goes up.
Exactly. It erodes trust, introduces uncertainty, and can make their job of managing the economy much, much harder. So it's a very deliberate signal to the markets, to the public. They're saying, our decisions are driven by our mandate, price stability, maximum employment, and nothing else.
It's quite a contrast when you look elsewhere, isn't it? Like Europe.
It is, yeah. It's a fascinating contrast. Over in Europe, you've seen multiple central banks already implement rate cuts. Now, that's partly due to different economic conditions, sure, but also maybe less direct political entanglement on this specific issue.
Right.
Meanwhile, the U.S. Fed is holding steady. Largely, it seems, because of this tariff uncertainty we talked about, plus ongoing tensions in the Middle East, which, can also affect supply chains and inflation.
Yeah, good point.
That divergence really highlights the unique domestic pressures and the global factors the Fed is juggling, and just how critical their independence is in navigating all of it.
Okay, so with all these pressures, the tariff concerns potentially leading to stagflation, the intense political demands for cuts, let's shift focus now to what the broader economic outlook for 2025 actually looks like.
All right, the big picture.
It sounds like the consensus among economists is, well, not great. The U.S. economy is predicted to experience a pretty significant slowdown.
That's the general feeling, yeah.
Most forecasts seem to be showing growth much below that robust, 2.8% to 2.9% we saw in 2023-2024.
A noticeable drop, definitely.
And we already have some concrete data painting a stark picture from Q1 2025. The economy actually contracted by 0.3%.
Yeah, that surprised some people.
That's the first decline since early 2022, right? After a long run of growth. So what specific factors contributed to that surprising contraction? And what are the experts saying about the rest of 2025? It sounds like we're moving from pretty strong growth into something much more, subdued.
Yeah, let's bring these grids together and look at what it means for the economic landscape this year. That Q1 2025 contraction, the first in over 3 years, it was driven by several key things, and they tell us a lot about current business thinking.
Okay, like what?
Well, a really significant contributor was a massive, and I mean massive, 41.3% increase in imports.
Whoa, 41%. Why so high?
It's an astonishing figure, right? And it really highlights how aggressively companies are already hedging against future tariffs.
Trying to get goods in before potential new taxes hit.
Exactly. They're essentially front-loading goods, bringing them into the country before potential tariffs kick in to avoid those higher costs later. Now, while that might seem smart for individual businesses, a huge surge in imports actually subtracts from GDP growth in the short term.
Because GDP measures domestic production.
You got it. On top of that massive import surge, we also saw weakening consumer spending, which is, a major driver of the U.S. economy, and declining federal expenditures, both critical components of economic activity.
So imports up, spending down, government spending down.
Yeah.
Yeah, I can see how that leads to contraction.
Right. Those factors together painted that initial picture of contraction. Now, looking ahead, the economic forecasts for the rest of 2025, they vary a bit in the exact numbers, but they consistently point towards a downward trend. caution seems to be the word, a significant deceleration from recent years.
What are some specific predictions?
Okay, so the Conference Board, for instance, is predicting significant shocks to economic growth as the effects of these tariffs ripple through the economy.
Shocks, okay.
They anticipate this ripple effect hitting various sectors as supply chains adjust and prices shift. S&P Global Ratings, they're forecasting annual growth of just 1.9%, a notable step down.
Still growth, but slower.
Right. Then you have the survey of professional forecasters, they're even more pessimistic. They anticipate just 1.4% growth for 2025. And that's a full percentage point drop from their earlier estimates.
Wow, they revised down quite a bit.
Yeah, indicating a rapid change in expectations as new data came in. BNP Paribas projects an even lower 0.6% growth. They specifically cite a deteriorating labor market as a primary concern.
So worries about jobs, too.
Yeah, they're looking at things like hiring rates, unemployment claims, seeing signs of softness there. Even Goldman Sachs, which sometimes leans a bit more optimistic, recently lowered its GDP forecast for 2025, down to 1.7% from an earlier 2.2%.
And why the change for them?
They based it on what they called significantly more adverse assumptions about trade policy. So they're clearly baking in the negative impacts of these trade tensions now.
Okay.
And with all of this, most analysts expect we'll see the unemployment rate tick up, maybe to around 4.5%, which, while still pretty low historically, would represent a noticeable softening in the job market compared to where we've been.
It really paints a picture of a challenging year ahead, doesn't it? Where these policy choices have very real, measurable consequences.
Absolutely.
Wow. Okay, so to sort of bring it all together for you, our listener, we've really painted a complex, interconnected picture here today. You've got the Federal Reserve grappling with this very real, evolving threat of tariff-induced stagflation.
That tricky mix, yeah.
A tricky combination of rising prices and slowing growth. All of this is happening while they're navigating intense public political pressure coming from the highest offices, demanding actions that could potentially undermine their, carefully considered economic strategy.
A tough spot.
And all of this is unfolding within a broader economic forecast that points to a significant slowdown in 2025, with data already showing a contraction early in the year. It's not just a collection of headlines, is it? It's a real dynamic interplay of forces that will shape the economic landscape.
That's right. This deep dive, I think, really highlights just how inextricably linked monetary policy, trade policy, and political dynamics truly are. It's not just about abstract numbers on a page.
Yeah.
It's about the push and pull of these powerful forces that shape our economic reality and, by extension, your everyday life. So we really encourage you to consider how these tensions and predictions might shape not only the national economy, but maybe your own financial outlook, your daily life in the coming year.
From prices at the store to the job market.
Exactly. To broader investment opportunities. What does this delicate balance actually mean for future policy decisions? And, how might you continue to watch these critical forces unfold in the months ahead? Because the story is definitely far from over.